Chapter 7, Customers and Sales, Part 2. There are several advanced sales transactions that you can use in QuickBooks to get more out of the system for your business. We'll introduce you to these features in Chapter 7. In this chapter, you'll learn how to use advanced options on sales transactions. You'll learn about credits and refunds, customer statements, delayed charges and delayed credits, and estimates. Sales settings. There are several options available to you when creating sales invoices. They may be useful in different situations when creating sales transactions for your customers. To access these features, go to the company settings. Click the Sales option. There are 8 additional options you can enable from here. Let's review these in detail. First, Preferred Invoice Terms. This determines the default terms to be added to customer invoices. Preferred Delivery Method. The delivery method default determines the way that you'll deliver sales forms to newly created customers. Shipping. This adds shipping fields including date, tracking number, destination, subtotal to sales forms. Custom Fields. This adds extra fields to sales forms. Select Internal to show the field in QuickBooks. Select Public to show the field on customer forms. Custom Transaction Numbers. This lets you use your own numbering system. If it's left blank, invoice numbers are automatically assigned by QuickBooks starting at 1000 and counting up from there. If you do not choose Custom Transaction Numbers, this field will not display for the user on invoices. Service Date. This feature adds a service date field if you need to track the date a service was performed separately from the invoice date. Discount. This adds a discount field to invoices and other sales forms. In a related setting under Advanced Chart of Accounts, you can assign what account to track the discount to. And finally, Deposit. This adds a deposit field to invoices so you can subtract a customer deposit from the total to calculate the balance due. Another term for this would be a payment item, as it acts as a payment on the initial invoice you're creating for the customer. Use these sales options in cases where the students might need to add more information to sales transactions. Credit memos and refund receipts. There are times when you'll be required to issue a credit or a refund back to a customer for a variety of reasons. These may include faulty products, overcharging, poor service, etc. There are 2 ways to handle this type of transaction in QuickBooks. The first is the credit memo. You'll create a credit memo in QuickBooks if you want to issue a credit and apply the credit against an outstanding or future invoice. If you've created an invoice for the customer, you typically issue a credit memo. The workflow will consist of credit memo, and then applying the credit memo on the Receive Payments window. Refund Receipt. Create a refund receipt to refund a customer for a payment they've made for products and services. If you've created a sales receipt for the customer, you typically issue a refund receipt. The workflow will consist of creating a refund receipt and then printing a check as an optional step to ensure the refund is returned to the customer. Depending on the workflow you chose on the initial transaction, such as an invoice or a sales receipt, you will choose either a credit memo or a refund receipt. Now let's look at these in more detail. Credit memos in QuickBooks. You'll create a credit memo to apply against an outstanding invoice or save it for a future time to be applied against an upcoming sale. When you first set up your company with the students, QuickBooks enables a setting that automatically applies credits. This is to help ensure all credits are applied. However, in this case, the credit is applied against the oldest outstanding invoice, and you do not have a choice of where to apply the credit. Sometimes a student would like to apply a specific credit against a specific invoice. If this is the case, it's a good idea to disable this setting. To do this, go to the company settings, click Advanced, and then click Automation. In this setting, clear the option Automatically Apply Credits. Click Save to disable this setting. Now, to create the credit memo, you'll go back to the Create menu and then click Credit Memo. You'll complete the credit memo in the same way as you created the original invoice. It's important that you use the same products or services from the original invoice so that the negative invoice or the credit memo will apply against the same accounts that you were using on the original sales transaction. Choose the same tax rate as well, as this will affect the GST, HST, or PST for the transaction. After creating the credit memo and saving it, the next step is to apply the credit memo against the outstanding invoice. In this case, you'll go to the Receive Payments window from the Create menu. Enter the name of the customer, and now QuickBooks will display all of the outstanding transactions as well as all of the outstanding credits. First, select the outstanding invoices to apply the credit against. Next, select the credits that you would like to apply against the invoices. QuickBooks applies the amount against the invoice and leaves the difference in the amount received, if there is one. At this point, you can choose to receive the payment or just apply the credit. If you only choose to apply the credit in this instant, make sure that you enter $0.00 in the amount received field. Click Save to apply the credit against the outstanding invoices. Refund Receipts. When a customer is paid for products and services on a sales receipt in QuickBooks, you'll use the refund receipt to create the refund transaction. The refund receipt is similar to the sales receipt. In the case of the refund receipt, you'll tell QuickBooks what product or service you're issuing a refund for and add the refund information at the same time as you issue the transaction. To do this, click the Create menu and then click Refund Receipt. Complete the refund receipt as you would the sales receipt, including the same products, pricing, and sales tax. Now, in the middle of the form, add the payment information for the refund using the payment method, refund from, and check or other field as optional here on this form. After entering the payment information, you're ready to click Save, and QuickBooks will display that the confirmation of the refund was successful. Customer Statements. A customer statement is the status of a customer's account at a particular point in time. Customer statements in QuickBooks don't offer as much detail on individual sales transactions as an invoice or a sales receipt would. Statements are often sent out on a regular basis to let your customers know where they stand and if they still owe you any money. Each line item on a statement represents sales transactions, credits, and payments for the time period of the statement. You can create a balance forward, open item, or transaction statement. The balance forward displays all activity dated between start and end dates. It will show a balance forward amount at the top. Open item displays all open invoices and credits from a specific date backwards. Transaction statement doesn't show a balance, it just shows the amount of transactions and the amount received for each individual transaction. This is the most comprehensive type of statement you can create for a customer. To create statements for multiple customers, click the Create menu and then click Statement. Under Choose Statement Type, click to select Balance Forward, Open Item, or Transaction Statement depending on your preference. Enter the statement date, the start and end date, and any other additional criteria if needed. After making your selections, click Apply. The Statements window displays. Read the instructions at the top and select the appropriate customers, and then click Create Send Selected Statements. This will give you the option to send any statements that you've chosen to email, or you can click Print and Preview and then click Print to print any statements for customers. Delayed charges. A delayed charge is something that you'll be creating an invoice for in the future but are not quite ready to create the invoice just yet. You create the charge and it will display in the Customers tab but won't affect their balance. The delayed charge is a non-posting transaction in QuickBooks. You will create charges over a period of time and add those charges to invoices when you're ready to make the sale. This feature is available in the QuickBooks Online Plus version. To create a delayed charge, click the Create icon and then click Delayed Charge. Complete the delayed charge form just like any other sales receipt or invoice transaction. After you complete the delayed charge, click Save, and QuickBooks adds the delayed charge to the customer's account. Over whatever period of time you choose, you can repeat this process for each additional charge. If you'd like to see all of the delayed charges on a customer's account, you can go to the Customer Center and click the Unbilled Activities section. QuickBooks will filter the customer list and display any outstanding delayed charges. After entering all of the appropriate delayed charges, you're now ready to add charges to invoices. You can add as many delayed charges as you want over any period. You can transfer one or more delayed charge to an invoice. To create the invoice from the delayed charges, click the Create menu and then click Invoice. Choose the customer that has any delayed charges attached to their record, and then click Tab. QuickBooks will immediately display the outstanding delayed charges on the right side of the invoice window. From here, you can click Add or Add All to add any delayed charges to the invoice. Now, edit or review the invoice transaction as needed, and then you're ready to click Save to save the invoice. That completes the creation from delayed charge to the invoice. Delayed credits. The delayed credit is just like the delayed charge. It is a credit that can be applied at a later time. The delayed credit is also a non-posting transaction, which means that it will not post to an account until you apply the credit to a transaction. To create a delayed credit, click the Create menu and then click Delayed Credit. Complete the form just like you would any other delayed charge or a sales transaction. Click Save. Follow the same instructions as the delayed charge to transfer the delayed credit to the invoice. Sub-customers. At times in your business, you may want to track more detail about customers. At times, you may work on different jobs or projects for customers. QuickBooks lets you track the details of these customer projects using sub-customers. A sub-customer is a name linked to the customer. As you create a sub-customer, QuickBooks will display the name indented below the parent customer on the Customer Center. To create a sub-customer, from the Customer Center, click New. Add the sub-customer information just like you would for a regular customer. Now click Sub Customer on the right side of the window, and then choose the parent customer from the drop-down menu. Complete the rest of the information and click Save. Now, when you review this customer, they will have a sub-customer indented below their name on the Customer Center. Estimates in QuickBooks. An estimate is a description of work you can provide or products you can provide for customers. QuickBooks refers to this as creating an estimate, but you can give the form your own title such as bid, grant, proposal, or quote. Creating an estimate is very similar to creating an invoice. In QuickBooks, you can do the following: customize the headings, fields, and columns that appear on your estimate, apply each estimate to a customer or job, or apply multiple estimates to a job, start with a blank estimate and enter items already on your items list, or enter new items as you create the estimate. Modify an existing estimate anytime and resubmit it to your customer. You can email the estimate to your customer directly from QuickBooks. And most importantly, you can turn the estimate directly into an invoice. To use estimates in QuickBooks, you should review the company settings related to it. Go to the Accountant settings and then click Advanced. Click Automation. Select the option Copy Estimates to Invoices. In this section, you can choose the following: copy pending and accepted estimates. This means that you can copy both statuses of estimates, including pending and accepted estimates, or copy accepted estimates only. This means that you copy an estimate to an invoice that a user in QuickBooks must mark as accepted before copying. After setting up the appropriate settings, click to save. Now you're ready to create estimates. Creating estimates. To create the estimate, go to the Create menu and then click Estimate. Complete the form just like any other sales form. First, choose the customer's name. Then, choose the status of the estimate from the drop-down menu below the customer's name. Enter the date of the estimate. And now, in the body of the estimate, add the products and services you're going to be selling to the customer. Enter all of the descriptions, quantities, amounts, and sales taxes as you would on any other sales form. After reviewing all of the information, click to save the estimate. When you've completed the project for the customer, you're now ready to copy the estimate to an invoice. To do this, click the Create menu and then click Invoice. Choose the customer that you've completed the project for that has an outstanding or open estimate. After making the selection of the customer, click Tab, and QuickBooks will immediately open the estimate in the right side of the QuickBooks window. Click Add or Add All to the estimates that you want to copy across to the invoice. That's all that's required to copy the estimate to the invoice. Please note that when QuickBooks copies the estimate, it copies the entire amount across, and it does not have the possibility of progress invoicing as of right now. It closes the estimate in full so that QuickBooks will no longer remind you to copy the estimate in the future.